we are going to issue $500 billion or more of treasuries and hand it out to the public. Like that would be another level of bullishness for all types of risky assets. This, I think, is signaling that Team Red Republicans are in the game of giving out free shit. And this is a very easy thing to say because he could paint it to his conservative folks as, oh, no, it's budget neutral because we've already collected the tariff revenue. But again, it's in the same theme of, hey, there are these Democrats like Mamdani and others out there saying, we're going to give you free shit. Well, the Republicans are in the game of giving free shit, too. And this is how we're going to do it. And here's a signal of that we're serious about this. I think we're going to see a lot of different types of things coming out from them next year.
Whenever markets pull back, people immediately assume the cycle is over. Bitcoin slips under $100,000, altcoins bleed out, sentiment turns cold, and suddenly the same crowd that was screaming supercycle is now convinced that the bull market has stalled. But according to Arthur Hayes, this moment isn't a top. It's the calm before one of the loudest liquidity waves we've ever seen. Hayes' entire framework is built around a simple point. Markets don't move on vibes, they move on money. And right now, the political and macro environment is quietly aligning for a historic flood of new liquidity. Liquidity that he believes will supercharge Bitcoin, Ethereum, and a very small handful of profitable altcoins heading into 2026. Hayes argues that the recent underperformance narrative misses a deeper truth. Bitcoin's flat year-to-date isn't a sign of weakness. It's the result of a temporary liquidity drain inside the US financial system. Once that reverses, Hayes expects Bitcoin to resume its structural trend as the best-performing asset of the modern era. Meanwhile, he sees Ethereum preparing for a massive repricing as traditional finance quietly tests stablecoin issuance, settlement infrastructure, and capital market tools directly on the Ethereum base layer. In his view, Ethereum is still gearing up for a 10,000 to 20,000 end-of-cycle range. And beyond that, Hayes believes 2026 will bring a very specific kind of altcoin season, one driven not by hype, but by protocols with real revenue, real customers, and real cash flows returning to token holders. The fuel for this next leg up, Hayes says, won't come from ETFs or halving cycles. It will come from Washington. The Trump administration is signaling something few analysts are pricing in: a full return to aggressive fiscal expansion under the banner of free stuff, a playbook both parties have used for over a decade. Whether it's through tariffs, tax rebates, industrial policy, defense spending, or direct transfers, the outcome is the same: more dollars being created and injected into the economy right before the 2026 midterms. Hayes' view is blunt. Republicans must print to secure the election, and if they print, crypto rallies. Not slowly, but violently, just like every time helicopter money has hit the system. So in today's video, we're breaking down exactly why Arthur Hayes believes this pullback is the opportunity of the cycle, how his thesis ties together Bitcoin, Ethereum, altcoins, and the 2026 election calendar, and what the next liquidity wave might look like. If you find value in deep dive macro crypto analysis like this, make sure to hit the like button, subscribe, and turn on notifications. Thanks, and enjoy the video.
Yeah, so obviously everything is entry level dependent. If you've been in Bitcoin for a while, you're not that fussed about sort of the lackluster performance, but because we're humans and we like to make these artificial delineations of time in terms of January to November, whatever it is, then people are a bit like, oh, why isn't Bitcoin the best performing thing in, the 11 months of 2025? Why is it gold? Why is it Nvidia or whatever it is, right? And they forget that for those of us who've been in this game for a while, that Bitcoin's been the best performing asset of all time, especially given the debasement of currencies around the world. But back to this year. We think about the main events of this year. The first was the inauguration of U.S. President Trump. And I came out with a call back in January of this year, basically being like, well, where is the impulse for spending money? Where is the printed money going to come from? Trump's promising all these things. Can he actually make good on them? Obviously, the hype was massive. We had the Trump meme coin launch. And then just like we're in a simulation on January 20th, pretty much the market peaked and it was down. And the April Liberation Day was sort of the icing on the cake in terms of Bitcoin poor price performance where we get down to like 73, 74,000 on Bitcoin. And then those of us who, had cash available were able to capitalize on sort of the Trump taco trade in terms of the trade negotiations with predominantly China and the rest of the world. And obviously, if you've been invested from April 9th until the present, you've done very, very well in Bitcoin and gold and some other things. And now if we come to the fall, I posted a chart maybe a week and a half ago, and it was my liquidity indicator, starting with the debt ceiling raising of the debt ceiling in July 4th of 2025 this year. And myself and other macro analysts pointed out that the Treasury under Buffalo Bill Bessent had to raise cash to refill its coffers. And they've done so to the tune of about $1 trillion on a net basis. If you take a look at the Treasury General account, over the same time period, there wasn't really any new source of dollar liquidity being pumped into the system. And we also saw stress in the funding markets, meaning that cash is tight within the US money markets. And Bitcoin pretty much was down 5 or 6%, in line with dollar liquidity down 5 or 6% from July. And so the question now is, okay, well, the government's been shut down. The Treasury's issued way too much debt. They haven't really spent any money over the last, 40 days, however long it's lasted. And now that we expect this to end, because I guess the Senate voted, or maybe the House voted, I don't know which one, the Treasury's going to get back to doing what it does best, printing money and spending it on stuff. On goodies. Now, you might not like the goodies that they're spending the money on, but we don't care as crypto investors. As long as there's more dollars being created, our assets are going to benefit, predominantly Bitcoin. And so I think that this is the time now to start getting ready for the real show of Trump and Bessent. Now, for those of you who watch the U.S. elections in the various cities around the United States, the Democrats had a very good showing. And essentially their message was free shit and anti-Trump. And I think what people forget is that U.S. President Trump is one of the biggest free shitters out there. He did the biggest free shit giveaway, the helicopter money COVID stimulus checks, which prompted Biden to follow suit. So I know that the team red Republicans like to throw these words, socialism, and that's a dirty word in American politics around. They're just as socialist as the Democrats. It's just that they hand the money out to big corporations and the Democrats hand it out to migrants. It doesn't matter. We don't care. Take your political ideology out of it. Express yourself at the ballot box. If you want to make money, it doesn't really matter where the money's going. It's just that it is created and Bitcoin benefits. And so I think that if the team red Republicans want to have any shot of winning the U.S. midterm elections next November, forget about China, forget about trade war. It's all about printing money and handing it out, whether that's to build weapons, to build rare earths, to supercharge AI, all the things that the Republicans like to fund. They're going to print the money to make sure that happens, and so that their constituency feels the love going into November and shows up at the ballot box. And that's what 2026 is all about. And now we have this awesome opportunity to get in before it's crystal clear that they're going to print a lot of money. Right now, there's a little bit of uncertainty about, is there going to be enough liquidity? Are we at the top of the 4-year cycle? This is a time now to deploy capital. Specific types of altcoins are dead. I think we had some amazing price discovery in that 1010 crash. Essentially, you had a large swath of the alt universe, which was just a market maker circle jerk. They pretend to provide liquidity. We pretend that it's worth whatever fully diluted valuation. When the market maker leaves, there's no organic demand for these pieces of shit, and they're worth 90% less than that we see on the screen. So great. We know what most of this ecosystem is worth, zero. And people should treat it that way. Now, today, just recently, Uniswap put a proposal forward to turn on a fee switch, and Uni's up 30% in a matter of minutes on the announcement. Now, what does that prove? If we have protocols, and we do have these, that have real clients, Uniswap has real clients that pay real money. People spend, things other than Uniswap and Uniswap to pay for fees. And finally, we're going to get some of that money back as token holders. Now, that's great. That's why Uniswap is pumping. That's why EtherFi is doing well. That's why Athena is doing well. That's why Pendle is doing well. These are projects with clients. These are projects with revenue. These are projects that profit goes back to the token holders. That is the altcoin season that we're going to see, I think, in 2026.
How do you discern between something that's, of sound properties and something that's just garbage?
Again, this is all my opinion. Everyone's investment philosophy is different, right? I'm coming from a a stance of capital abundance. So I'm more concerned about capital preservation than appreciation. Like Zcash, I was late, right? I didn't buy Zcash at $20 before, or what, $30 before the recent massive move. I bought it in the hundreds, right? I heard about it late, but I don't want to be early and, be down 100%. So that's just how I approach things. So if I am going to be late and I want to be able to deploy a significant amount of capital and feel safe about it, safe in relative terms of crypto, then I want to see some profitability. I want to go on Token Terminal and look up, okay, who's making money? Who is putting that money back to the token holders? It's a very few projects that are doing that. Now, is this a project that's going to go 100x in the next 2 weeks? No. So a lot of people are like, no, that's not what I want. I am on a very low salary. I've got a little bit of savings. This is what I believe is my only way to escape the inflation trap that's been hoisted upon me by every single government around the world. YOLO this shit. I want to go long something that's going to go up 100x in the next 2 weeks. Well, then you're going to get shit that goes down 90% because the market maker went away. So that's the game people are playing. It's a very rational game. I'm not, trying to throw shade on them. I understand why people view this altcoin speculative game as a way out of a shitty situation that governments around the world have put themselves in, put the people in. But again, that's, that comes to the game. If you want to get 100x, you got to be able to suffer bagels.
The biggest story heading into 2026 is not the halving, not ETFs, and not the slowdown narrative that bearish analysts keep repeating. It's fiscal dominance. The government has been frozen during the shutdown, the Treasury has been hoarding cash, and spending has been unusually quiet. But once the gears restart, once Besant begins issuing and deploying capital at scale, we step into the exact environment where Bitcoin historically outperforms every other asset on Earth. That's why Hayes dismisses the idea that Bitcoin has stalled. He sees this moment as a coiled spring. The final quiet stretch before the Treasury begins pumping hundreds of billions of new dollars into the system. And this liquidity backdrop is exactly what leads him into the second big idea. 2026 won't just be a Bitcoin story. It will be a selective altcoin story. Hayes is brutally honest. Most altcoins will never recover. The 1010 crash exposed which tokens mean real business and which were just market maker theater. But it also revealed the survivors. Protocols with real users, real revenue, and real distribution to token holders. These are the assets that tend to outperform after liquidity floods back in. And as Hayes explains, they are the reason why the next altcoin cycle won't be driven by hype. It will be driven by fundamentals.
Do we see Bitcoin dominance rise, or is this finally going to be altcoin season come spring 2026?
So, Bitcoin dominance is really a function of what's ETH going to do. I'm in the Tom Lee camp. I think ETH is, going to continue this rally. You might not like the narrative, but he's trying to put this narrative out there that Ethereum is the public blockchain for TradFi that wants to get on chain. I know that there are lots of banks looking at doing stablecoin projects, other DeFi things within their businesses, and now they need to choose a public blockchain. I think that's going to be Ethereum. And Ethereum is going to rip. I've got a $10,000 to $20,000 price target for the end of the cycle. That will take Bitcoin dominance down. And then the DeFi projects that are profitable and are handing out revenue to token holders, like a Uniswap, those are going to see a resurgence.
What's your thesis on Ethereum again?
I think that it's going to be the narrative will be it's the layer one blockchain for TradFi. As in, you want to do stable coins on chain, you're going to use Ethereum. You want to do some sort of lending operation or capital markets thing. Now that you believe in DeFi, you're allowed to do it by your board. Whatever your solution is, you're going to use a public blockchain. It's going to be on Ethereum.
It's not, aren't there faster, cheaper blockchains already, though? Are there?
Well, Ethereum is the most secure, right? So if you think about, proof of stake, it's 300 something billion. It's the most secure in terms of value that is staked.
Mm-hmm. Trump announced, earlier on Sunday through True Social that he's interested in the idea of a $2,000 dividend payment, or at least $2,000 will be paid to most Americans from U.S. tariff revenues. The president called critics of tariffs fools and said that U.S. was taking in trillions of dollars. Well, last time we had stimulus money from the pandemic, the altcoin market blew up, crypto market blew up. I wonder, okay, so let's assume he goes ahead with this. We're going to get new stimmies. Now, there's two ways to look at it. Return to 2021, or people are finding other things to bet on now. People have moved on. Have you looked at sentiment? Yeah.
I think you should view this tariff thing as a signal, not the actual event, right? So what is he signaling here? He's signaling that Team Red Republicans are in the business of giving out free shit. Now, this isn't specifically free shit because if they've taxed consumers on the one hand to pay the tariff and then they give it back to them, it's kind of a net wash. At the end of the day, I'm sure there's some distribution issues, but this isn't as a game changer as if he said, we are going to issue $500 billion or more of treasuries and hand it out to the public. Like that would be another level of bullishness for all types of risky assets. This, I think, is signaling that Team Red Republicans are in the game of giving out free shit. And this is a very easy thing to say because he could paint it to his conservative folks as, oh, no, it's budget neutral because we've already collected the tariff revenue. But again, it's in the same theme of, hey, there are these Democrats like Mamdani and others out there saying, we're going to give you free shit. Well, the Republicans are in the game of giving free shit too. And this is how we're going to do it. And here's a signal of that we're serious about this. I think we're going to see a lot of different types of things coming out from them next year. But again, I just think it's creating this narrative that it's election time to give out the goodies. Here's an area where we can give you goodies, tariffs, versus, I don't know, Mamdani said, I'm going to give you a free bus pass or whatever it is, right? So again, it's all positioning and narrative. I don't really know if it actually get through, whether or not, I mean, who knows if his tariffs are even legal, right? The US Supreme Court's voting on whether they believe that Trump had the power to even levy these things. So again, I think it's more of a direction of travel. Understand that he's serious about giving out free shit. How he does it, we'll find out. But don't doubt that him and Buffalo Bill Besson are going to print ton of money to make sure that they have the greatest chance, or Team Republican, the greatest chance of winning in the November 2026 elections.
What do you personally want more if you were given the choice, free bus passes or free $2,000?
I think that the Team Republican strategy with crypto is, okay, we need to create, every administration needs to create a bubble to paper over the previous one that burst, right? And so if, what stands out, we have the AI and we have the crypto bubble. And so the Trump administration wants crypto to go up. If crypto goes up, and then now you can essentially securitize that crypto, right? Whether it's go to JP Morgan with your ETF and get a margin loan to do other stuff, whatever it is. Now you can get a house and pump the housing market. So let's take this cohort, let's pump them up with, market-friendly regulations and a lot of printed money. They're going to repay us by paying taxes and buying stuff. Now, if the housing market goes bananas because the crypto folks are buying it and everyone in America feels rich and they go out and take a home equity loan because now the 10-year yield is much lower and they compress the risk premium on mortgage-backed securities, oh my God, they just unleash trillions of dollars in the economy. Everybody's happy because 65% of the American public owns a house. There you go. There's your election. So again, how do you create a bubble that creates activity that pumps the assets that everybody owns so they feel good in November of 2026? If you view all politics through that lens, then it becomes very, very, it's not that difficult to understand what's going to happen.
What happens? How much more liquidity can we reasonably expect in the system by next year? And ultimately the impact of the markets, what can we expect?
I don't know what the number is. I think it'll be in the trillions. It really depends on what's the control mechanisms the Trump administration has over the various, government bureaucracies. There's housing markets one, they can unleash trillions by unleashing Fannie and Freddie to go out there and issue more mortgages. If they get control of the Fed, they can do some sort of yield curve control, cap yields, and that reduces mortgage rates. People are going to lever up their home equity. There's so many things they can do. And, I put some massive, there's stable coins, $10 trillion. I put big numbers out there. All I care about is getting the direction of travel right. And as long as you get the direction of travel right, you'll do well.
This is where Arthur's thesis becomes unmistakably bullish. If Bitcoin begins its next leg higher, and if Ethereum rips toward his $10,000 to $20,000 target, then dominance must fall and the profitable DeFi names will lead the second wave. He argues that Ethereum is becoming the default public chain for TradFi. The chain banks will use for stablecoins, tokenized lending, and internal capital markets experiments. That adoption alone is enough to support a major rally. But when you pair it with US election year stimulus, a Republican strategy built around creating another bubble, and Trump's own track record of free money economics, the picture becomes even clearer. The tariff dividend isn't the real event, it's the smoke signal. Hayes sees it as the administration publicly warming up its base, preparing them for bigger, more aggressive spending packages designed to juice activity ahead of the 2026 midterms. Whether it's housing, defense, AI, resource extraction, or direct transfers to households, the outcome is the same. Trillions of new dollars moving into the system, and in an environment where liquidity expands faster than economic output, hard assets and crypto, especially Bitcoin and Ethereum, are the primary beneficiaries. So when Hayes says the next year is the opportunity to position before the market fully wakes up, he's not exaggerating. He's pointing to the political incentives, the economic mechanics, and the historical playbook that every administration relies on when it needs to manufacture a boom. If the Trump team chooses crypto as the engine of that boom, and signs already point in that direction, then the next cycle will be defined by explosive upside across the entire digital asset space, not just Bitcoin. If you found this breakdown valuable and want to follow the rest of Arthur Hayes' predictions, from Bitcoin dominance to the 2026 altcoin cycle, make sure to like the video, subscribe, and stay tuned. Thanks for watching, and see you in the next one.